Assalamu alaikum everyone, welcome to today's Luna Classic video update for 16th of July. And right now this is the weekly time frame, and I talked about the weekly as well. And before I dive into the weekly, I want to show you Bitcoin right now, because we potentially are getting coupled, and we're actually matching every single thing with Bitcoin at the moment. So just want to give you a quick comment on Bitcoin. You can actually watch the whole update on the channel here, so I do recommend you to do that very quickly after you watch this video as well, because when you actually combine the Luna Classic video with the Bitcoin update, then you get a clear idea of what's going to happen next to the market. Okay, so stop beating around the bush and let's get diving into these three candles that you see right here. So is this three white soldiers? Damn no, it's actually a candlestick pattern known as stalled candlestick pattern. This is a bearish version of it. So when you have one big huge green candle, the next candle is actually a little bit smaller than the first one, and the third one is somehow smaller than the second one. So it's like this. Okay, this is the interpretation of that thing. The buyers were fierce, the buyers were losing power, the buyers lost even way more power. Okay, and that's actually bearish, and this is where your stop loss is going to be. If this is a short trade and the direction is to the downside, and potentially lose this level completely and go all the way down. That's the first thing. Number two is you have three black rows as well, and that is actually a negative candlestick as well. When you have negative red candle, negative second red candle, and a negative red third candle, that's a continuation pattern. It means that the trend to the downside is going to continue, right? The next thing to talk about is Luna Classic itself, right? So let's go back to the Luna Classic chart, and this is something I want to lay out for Bitcoin. And I was on the weekly time frame, and the weekly time frame, you can see it's a clear bearish Harami candlestick, and that's actually still heavy on the scale. So let's write in there, bearish Harami candlestick pattern. So opening this one up, you're gonna see that you did have that big green weekly candle, and next to it a small red candle with a small body right above it. So it's like a P-shaped kind of candlestick, so the letter P, so you go up, make a letter P like that, and that's actually bearish. And the only way to invalidate this level, actually, to be honest, again, all right, the only way to get bullish, I say this again and again, break this level. Okay, the 13,000 level, break it. Okay, the pump in between doesn't mean bullish at all. It doesn't mean uptrend. Even if you have 16% pump, 20% pump, yeah, intraday trading, that's a different sense. That's something else. I'm not even talking about an intraday trading. I'm talking about the overall bullish scenario to continue higher is to come up here, break that level like a boss, and don't even, there's a possibility, there's always chance to go back up to make a double top as well and continue lower. Okay, so the only thing you need as a trader is to make a perfect confirmation of a break of a resistance. So that means you break the resistance, you come down, you hold that level, you hold your nerves, and you continue higher. That's how you want to trade this stuff, and that's how trading is really going to be for this one. If that thing doesn't really happen, no point at all. No freaking point to trade this thing. All right, so that's the weekly, and we've talked about the bearish side of the weekly. Now let's dive into the daily. And yesterday clearly mentioned that this is a level moving forward that is going to act as a huge resistance, and boy oh boy, it did. Okay, it did. Watch yesterday's video. If you're new to the channel, I could have showed you the replay, but let's just not do this, because everyone who's been following me knows that this is something I was talking about yesterday, that this, as a matter of fact, it's titled "This Massive Wall Should Be Broken." It's not breaking it. Damn it, it's not really breaking it. And the second thing is that right on your ticker here on your right side of your trading view, you have 16 hours 21 minutes to actually close today's candlestick. So again, you might be putting the bearish Harami candlestick pattern. If you try to close like this, you're just going to be closing like this on the daily once again, isn't it? So that one big huge green candle, and next to it that red candle, now that means a selling opportunity. It doesn't even mean a buying opportunity. Some people just, that's the beauty of trading, you just get the idea if that red is a buying red. No, that red is pretty much a buying red, because when you combine the two candles, it actually gives you a signal of a reversal to the downside. Of course, you haven't closed this candlestick, but there's a good chance that you can actually even just dump down today, and tomorrow you just continue with the same flow to the downtrend. So all I can say is that you came down here, support there, came down, support there, support, 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 broke, went down, came up for the retest, got rejected, and this is known as KOD. And what is a KOD? It's just a short for kiss of death. Okay, so when you go to that line and you get rejected, you're getting the kiss of death. So what is that a good thing? Nah, right? Unless you don't go against the nature of the universe and you somehow get resurrected from the death of that kiss and you go above this level and move higher. That would be amazing, actually. So I reckon if you actually try to, all right, so if you do try to break this level, there's a good chance you actually move to that level up there. Okay, there's a good chance you go up there. My view still remains as, because it's on the charts, it's not even my personal opinion. Like, damn it, I don't have a personal opinion. This is technical analysis, and based on that TA level, there are good chances of still coming all the way to the downside, maybe to this level here, 6-9 something. Okay, maybe by the weekends, maybe next week, right? And you come down here, complete the handle maybe, and in the future try to come up here, break this level, and then we continue higher. So I don't even know if the cup and handle is going to be successful to be made at the moment or not, but it's weird. Now, one thing I'm going to do though is that I'm going to take this bottom here to the top right there, and let's actually see what you did. So it pretty much went to 0.382. You can see that 0.382 was a big level of resistance, and the only way to get bullish again, just notice how you have the golden ratio right at the place that I'm telling you should be breaking this level. Alright, so let me tell you the next technical target. If you do break that level, so if you break this level, put a tick there, just the Nike tick, okay? Just do it, and you're gonna look for a nice amazing price appreciation of 25,000 right over there. That's where you're gonna move on. Okay, just wake me up. I'm gonna go to sleep. Wake me up when you break this level. I'm gonna be ready to trade it with a stop loss, of course. Okay, with some calculation, with some small money management. You know, take a nice good entry and ride all the way up. Okay, I'm gonna ride all this one all the way up from this place to that place. Let's get 97% out of the way. Let's almost double our investment. But are you doing that? That's the damn problem. You're not doing that, all right? And that's it for this update on Luna Classic. I'm gonna see you in the next one. Allah Hafiz.